So it's Friday, and today is payout day for Group D and the weeklies for YieldMax. So let's get an update on MSTY and ULTY. And I did buy a new YieldMax ETF, SMCY. Hello, my friends. This is Legend. So today we're going to take a look to see where MSTY, MSTR, and Bitcoin are currently setting, as Bitcoin has been going down. So we'll take a look at those, and then we'll take a look at ULTY and see where it's setting, and to see if my buy order got executed or not. And I also bought a new YieldMax ETF today, and that was SMCY. It dropped down, and I'll go over why I got into that one. And then we'll do updates on the swing trades that I've got going on, along with the SPY daily swing trade that I am doing. So we got a lot to go over. But before we get into it, if you don't mind, hit that subscribe button and smash that like button. It does help the channel out if you appreciate this type of content. So let's just go ahead and jump right over into the Webull chart, and let's check out MSTY. All right, so here we are on MSTY. I know everybody sees the price and is starting to sweat this one out, right? Wondering why is it falling, right? It's falling down. It is at the low, right? It hit as low as 1544 today, which is the low so far, right? If I zoom out, and we're looking at the actual chart, right? This is the actual candles here. And as you can see, we are at a all-time low on MSTY. Not exactly what we want to see, right? It's not, for sure. But you do have to understand that Bitcoin is down, MSTR is down, so therefore MSTY's down. MSTY can't be up and the other one's to be down, right? It's especially MSTR, right? Because it is using MSTR as the underlying to sell those covered calls on. So if MSTR is down, it is, but I still am buying whenever it hits my buy points, right? So I am still in MSTY, and I am still hoping that it can continue to move on up. Now it is down, and let's just see, did it get down low enough for a purchase for me? So let's just go ahead and we'll change this to the adjusted chart to take a look at the indicators. So this chart will look very different than the actual moving chart. But I like to use the adjusted chart when I'm looking at the indicators, as it does add in more of the momentum of the stock itself. But let's take a look at the indicators, and let's just see if it was a good buy point using my buy point criteria. So I'll just zoom in on this like that right there, and let's turn on the Bollinger Band. And there we go. So as you can see, we are on the bottom half of that Bollinger Band. That RSI 2, though, it did not get below 10. It closed at a 15 on the RSI 2. So if it continues to move on down come Tuesday, then that RSI 2 could possibly move just below that 10 on the RSI 2, and therefore I might pick up a share or two, right? But my ultimate goal, of course, still is to get MSTY paid off. So I am very careful on my purchases, as I do not want to mess up my ultimate goal, right? Because each purchase does push me out just a little bit further. Now, once I get it paid off, then I can do whatever I want and it not affect the money that I would have invested in MSTY. So currently, I did not buy. I am waiting for it to come down just a bit more to pierce that 10 on the RSI 2. So let's just take a quick look at MSTR. And here we are on MSTR. And you can see, very similar chart, right? We've got that support right here. We are sitting right there on it. We've got the RSI 2 coming down, almost getting ready to go below that 10. And if it does, I'll pick up another share of MSTR. But it doesn't look like that's going to happen today, as the market is closed. And we will not trade again until Tuesday, because Monday is a holiday. So for now, I'm sitting on MSTR as well. And here is Bitcoin, and that's why everything is down on Misty and Mr., right? I mean, just look at this drop on Bitcoin. It got down to 107.4. We're currently sitting at 107.8. So we are still pushing down for the day. Now you can see I've got that big red line right here at 105.9 because that was a previous support line over here. We are sitting pretty close to this support line of 108.1, and we're currently down just below it, but we haven't necessarily closed below it yet. But the next support would be that 105.9. We'll see what happens as the weekend goes through, as Bitcoin will just continue to run 24/7. So now let's take a look at ULTY. And here we are on ULTY. It too was down, but it just broke below the midpoint on that Bollinger Band. And the RSI2 is coming down, but it did not get as low as the 10. So therefore, I'm at a hold on the buy. Now, I did go ahead and I did put in a buy at 560 right here. And you can see I've got a 560 buy and I've got a 550 buy. So if the price does drop down below or to 560, then it will pick up an additional 25 shares for me. And the same goes if it gets down to 550 as well. So currently I still have the 75 shares at the 582 average. I'll take that and I'll look to average down if this price comes back down some. Now, the one that I did add today, I added SMCY. So let's check that out. And here we are on SMCY. I did add this one today, and this is my first purchase of SMCY. It was just after the X date, right? Yesterday was the X date and today was the pay date. And we had that drop, right? So we are on the bottom half of that Bollinger Band, right? And that RSI2 did pierce that 10. It actually is sitting at 6.16. So I ended up purchasing 10 shares and I had a buy at 1464. So I'm good with that purchase. Like I said, we are on the bottom half of that Bollinger Band. And we did pierce the 10 on the RSI2. So I saw that as a potential good purchase. So I am now a proud owner of 10 shares of SMCY. And since this is my first purchase, I did not or will not receive this distribution that does pay out today because I had to have owned the shares no later than the end of Wednesday. Because you must own those shares before the X date. And the X date was Thursday. So let's change it up a little bit. And now let's talk about some swing trading. And the two that I have been showing on here, I wanted to show where they're at. If I'm up, down, still in it, or am I out of it, right? So let's start off with KO. And this is Coca-Cola right here. As you can see, I have 6 shares at 68.79. We are currently at 68.99, so I am up a little, right? Not much, but I'm up. Let's turn off the Bollinger Band and let's flip this over to the moving average. All right, there we are on the moving average. Now, you can see this green line right here. That's that MA5, right? And that's a 5 interval moving average. Now, we're looking at the day chart, right? So that would be a 5-day moving average. And you can see that currently that 5 MA is setting at 68.77. My purchase is 68.79, okay? So, and the fact that that candle is still running through that line, I don't want to set it for that price, right? I would much rather this move on up a little bit and then I can set my stop on that moving average. Now, ideally, what I would like for it to do is to move on back up, right? And I can follow that MA5 right here and follow it right up and stay about a day or two behind unless it has a huge pop. And then I would move it right up to the candle itself. But as we show some of these, you'll see what I mean about how I'm moving it, where I'm moving my stops, how I'm following it, and such, right? So hopefully this green can continue and we can continue to move on up. So far, this one is still a hold for me with my 6 shares at $68.79. I did not purchase any more because the current price is above my average. So now let's check out Walmart. And here we are on Walmart. Now, I have currently 5 shares at 96 even, right? And the current price being 96.98. So I am up on this one as well. As you can see, once again, we can zoom right in on this candle, and this is today's candle. And you can see that green line right here, that's that MA5. And it is sitting right there. And that candle is riding right through it. So I do not want to set a stop until this candle gets up above that MA5. I need it to be above it to open and close and not touch that MA5. So with that candle riding through that MA5, I do not want to set a stop there, right? So once that does get up above it, it stays above it, then I can set my stop on that MA5, and that is where I will add my protection for the downside. Now currently that MA5, and you can see the price of it over here, see MA5 right here. When I hover over it, the MA5 being 96.26. So even if I did set it right there, I could protect myself on the downside, right? Because my current buy price is 96 even. The MA5 being at that 96.26 does give me 26 cents per share profit if it did get stopped out at that point. Now that's not a whole lot of money, right? So therefore I don't want to do that. I want this candle to get on up here and live up above that MA5. And as you can see, it's already turning around. That MA5 is turning around. It was pointing down. Now it's pointing straight across with a slight uptick, right? Just ever so slightly. But I'm hoping that come Tuesday, we get a nice another green candle here, and then we can start moving this MA5 up. Now at that point, if we can get a candle that lives up above it, then I can put my stop here if that is what I want to do and protect myself, and I'll still come out with a win. It'll be a small win, but it'll still be a win. And then as it would move on up, I can continually follow that MA5 right up the chain, right? And I normally like to stay a couple days behind, right? And what I mean by that is if I come over here and I look for a candle, right? Just something for an example. So for instance, this right here, if I bought it, say here, this candle was touching through it, so I don't necessarily set my stop. This one here went above it, right? But you got that long wick on top. That is a very bearish move, right? Because that could mean it's coming on down. And the next day you can see you did have a red candle. And it did get pretty low there, right? So if I had my stop sitting right here at that 95.05, this candle right here went as low as 95.07. So I would have just barely made it, right? But who knows, it would have probably come down just a tad further and take my shares, right? But that's why I wouldn't probably set a stop when I would see a candle like this right here, knowing that the next day it's very possible to be a red candle because that's a very bearish candle. I get my red candle here, then over here I get a nice green candle, but I've still got these little wicks on the bottom and wicks on top, right? This wick on the bottom is still coming down too low. So I still probably would not set a stop until this candle, right? Now this candle, it has a low of 96.31. Now if I bought it over here and say I bought it at that close of 94.83, then I could come in here and I could set my stop, right? And since this here went as low as 96.31, I could set my stop right here at 95.14 just for that protection, even though I did buy it at 94.83. So that's not a big win if it does come all the way back down to here. But as this candle here would move on up and up, once it got to right here, I would jump my stop all the way up to right here. So see, if this is today's candle, I would keep it a couple days before. So say 1, 2. So now my stop would be 96.03 and the current price or closing price of that day being 98.10. All right. Now, so I'm right here at 96.03. Next day, I get a red candle. Do I move it up here on that next day? Not with that red candle, I don't. For that red candle right there, I'm going to keep giving it some room to breathe. I'm going to stay right here at 96.03, right here at this day. I'm not going to move it because of that red candle. Now I get this green candle, but it is kind of really far down, right? It is still as low as this candle. Now that's a judgment call if you want to move from here up 1, right? That's a judgment call. And that is everybody's choice to do so. I personally probably would wait, right? Because it's just as low as the previous candle. Now this one here does move up some. So what would I do? From here, I would bump it up 1. And you kind of see what I'm talking about. As it moves up, I'm going to move up with it, but I want to give it a gap. So this is the buffer that I'm talking about, right? So I'm given basically kind of like this area here for that price to kind of come down before it would kick me out. So by staying right here on this green dot, I am below this little buffer area, right? So that's all I'm doing is I'm just giving myself a little room for that price to kind of fluctuate without kicking me out immediately, right? So that's all I'm talking about when I'm talking about a day or so behind. So for this one, I am still at a hold at 5 shares at 96 even. Now the last one I wanted to go over with is the one that I'm using for SPY here, and let's go to that. So here we are on SPY, and as you can see, I've got a lot of lines in here, okay? And sorry if it is adding a little bit of confusion, but there's just a lot going on, right? Now for the SPY, what I'm doing for this is I'm actually selling puts and selling calls with a daily expiration, right? For this one, I'm changing it up even more, right? So for this one, I'm using a daily expiration. So I don't necessarily want to look at the day chart, right? I want to look at maybe the 5-minute chart for this one. And I'll show you where I got in, what I did, and what happened. But you can kind of see right here is a little bit of a giveaway, right? I did sell a 645 put. And what that means is if the price of SPY gets to or below 645, then I am required and I am obligated to purchase 100 shares of this stock. In this case, ETF, right? So let's just go to the 5-minute chart and I'll show you basically about where I got in and how the stock was running. All right, so here we are on the 5-minute chart. And now you can see this darker area over here, or I guess actually the purplish area here. And this is the black area, right? This is the actual day. Once the market opens, that's this black area, right? This purple area is pre-market. And if you keep going on over, it is post-market of the previous day, right? So this one here, actually, if we zoom on back and let's just look at what it did the day before, you can see this is where it basically came out the day before and it closed up here, right? So what I do is I'll draw a line from the high and the low of the previous day, okay? So I'll draw that line there and I draw a line here. So that's the high, low of the previous day, and that will be extended all the way over here to the current day. And you can see that's the current day because we are now in the aftermarket hours, and that's where it's setting. So that white line here and that white line here is the previous day high and low. Then what I do also is I have these little blue lines right here and right here, okay? And what I will do with that is when I'm looking at the market before opening, okay? Before opening, I'll use the 10-minute chart, right? Because sometimes it just makes it a little bit easier to find that high and low. I wanted to see, what was that high? Well, that high being about right here, right? So I drew a line there, and I said, well, what's the low? Well, right here. So I drew a line right there. those I have as the blue lines, okay? So that's kind of the pre-market close to about where I had opened the charts at just to draw the lines, right? So that way I know kind of where my little comfy zone is, and that's the market comfy zone. And that's where it's going to want to try to stay sometimes, right? Now, if it does break out or if it does break down, then you can kind of see that. And the same thing goes for the white lines, right? That's kind of the comfy zone from the day before, right? Because that was the high and low of the day before. Now, as you can see today, what a red day. Oh my goodness, did it fall, right? So here we go. It opens up and it starts coming down, right? And then it gets to this candle and it's still coming down. And I see that, okay? I see it that it broke this blue line right here. So what did I do? My first thought was to wait till it got closer to this white line, the low of the previous day. And if it got there, then I could sell a put at some strike outside of that point, right? And that way, if it did get down there, and if I get assigned those shares at that price, I'm getting a really good deal, right? Because I'll be looking on the next day to hopefully sell a call above that cost and then profit the difference, along with making the premiums, right? So as it was coming down right here, and then it was kind of shooting right back up, right? Then I changed my plan, right? Okay, might have not have been the smartest thing because as you can see, I ended up getting in somewhere about right in here. And I sold a 645 put, all right? And the price of it was around about 646. So it broke it and I sold that 645 put. And I earned 65 cents per share times the 100 shares, right? So I earned a total of $65 for selling that put. Now, the whole idea is if it does come down to 645 and it closes at or below 645, then I would be assigned the shares. I would then look to sell a call above that so that I can get that price appreciation, right? And like I said, these are all on 0 DTE. And what that means is 0 days till expire, right? So that just means you open and you're closing the same day. But anyway, I got in about right here after it broke that line. And the reason I went ahead and did it for the 645 at this point is because a couple other times I was waiting for it to move on down. And what did it do? It got to a certain point and then it shot right back up. And I did not get a feel for that put. I kept losing the chance of earning that premium for that put. So this time when it did break, I ended up going ahead and setting that 645 put. So that earned me that $65, but I was on the hook for 100 shares at 645 per share, right? So then what happened? Well, it started dropping and then it started dropping and then it dropped, right? And look what it did. It actually broke that white line, which was the low from the previous day. So had I stuck with my first plan, in this case, in this scenario, that would have worked well, right? Because it would have come right down to right here. And as soon as it got down close to that line, I would have went in and it's at a 645.34. I would have probably sold a 644 put and I probably could have earned a little over $1 at least, right? Especially with this down momentum after that point, right? And also have my strike $1 cheaper, right? So therefore, I would only be required to buy if it was at or below 644 instead of 645. But all said and done, I was at the 645 right here is when I got in. But that 645 was right here at this green line, right? That was my break even, right? I needed to stay above that or I'd be assigned the shares. Now, I have no problem being assigned the shares for a SPY because overall the SPY goes up, right? Now, it may take some time for it to go up if we're having a downturn, but overall it will eventually go up. So I do not ever worry about the SPY, but then that is my opinion, and do your own research before you get into any kind of stocks or ETFs. But the way I'm playing this is I'm playing SPY, and I consider it as one of the safest ones. And I air quote safe, right? Because in the market, nothing is safe. But had I waited until it got down to that line, then I could have earned a little bit more premium and have had a lower strike. Now, what happened going forward? Well, it was staying down here, right? It was staying in the 644 area. And I saw this and I thought, okay, well, I'm going to get assigned the shares at 645. Exactly what it looks like, right? Because it is just staying right here. It would get up to this 645 and then come down from it, right? Come back down. And it hit this little support right here and then come back up. And it hit that 645 again. And then it would come back down, right? So after about this time right here, I wasn't necessarily looking at it anymore. I didn't look at it until after the market had closed. So I just assumed I was going to put the shares. And what did it do? Look at this. It came up and then look where it closed. At the top of this candle is at the 4 o'clock. And that is 4 o'clock Eastern Standard Time. And that is the close of the market. And that candle right there at the top of that candle, that green candle, it pierced that 645 mark right here, that green line. It pierced it, and that's where it closed. And it closed at the 645.05. Therefore, since it is above the 645, I do not have to buy those shares, even though I didn't mind buying them because I was hoping to be able to sell a call next week at say 647 or something like that, right? Make an extra $200 along with premium, all in a matter of 2 trading days. Not too shabby, personally. Now, not guaranteed, but that was the idea. But after it did close, what did it do? It actually fell down the after hours and it closed at 644.73, right? So had this candle happened one candle before, I would have been assigned those shares at 645 and I would then be a proud owner of 100 shares of SPY. So very funny how things work, right? This actually closed above my price, therefore I don't have to purchase those shares. And what can I do on Tuesday? Well, if it's another red day, I can look to sell another put, right? So either way, whether I'm selling the put or selling the call, I can earn the premium. Now, once I own the shares, then I can sell the call. And as long as I sell that call for above my purchase price, then I will also earn that price appreciation on top of the premium. So that's what I'm doing, and that's how I'm going to work to try to get my account up. Now, at a price of $6.45 per share, this is definitely not for a small account, right? Because 100 shares of this ETF is $64,000, right? So that's nothing to be shaking a stick at, right? You know, and that's 100 shares, one contract, right? And that's the reason a lot of times people end up buying contracts, right? They'll buy a contract because you only have to put up the cost of the contract. Whereas selling the put, I have to put up the amount that it would take to purchase 100 shares, right? But the difference is, and there's a big difference, selling puts, I can win in multiple ways. If I'm selling a put and the price of the stock goes up, I win. I keep the premium. I don't own the shares. I then get my money added back into my account, right? If it goes sideways and moves nowhere, as long as it does not get below my strike, I don't have to buy the shares. The money comes back into my account. If the price of the stock goes down, but then ends up above my strike, then I win again, right? I win again, just like today, actually. Actually, today is a great example. Fell right down below, right? But closed just above it. So I am not put those shares. Therefore, the 64K that was being held is now back into my account for me to use once again, and I get to keep the $65. But now buying a put, or buying a call, then you're only paying the price of that premium, right? You pay the premium if you're buying it. So instead of earning 65, in a way, you would have to pay 65 for that same strike, right? And the thing that you have going against you on buying, the longer you keep it, the longer and the more that theta, which is one of the Greeks, right? Theta will eat away at your premium, right? Because you buy it at a certain price and you need to sell it where the premium is higher than it was before, right? Because you need to make a profit. But the longer you keep it, the less that premium is, right? Because that premium is decreasing the longer you hold it, because your expiration is right here. So delta is really eating away at that premium. So that 65 can become 62 and then become 61 and become 50 and 30 and 20. And before you know it, you've already lost half of your money that you've paid. And then you've got to sell to close it, right? And you sell it at that $20 or whatever it is, 20 cents. And at that point, then you take the difference, right? You bought it at 65 and then you sold it at 20. Well, you just lost 45 cents, right? Therefore, 45 cents times 100, that's 45 bucks. Now, that's all that you lost, right? And that's the reason why buying options is so enticing to a lot of traders, because they don't have to fork up as much money. You don't have to put up $64,000 to buy an option. You only have to put up the 50 bucks or 60 bucks or 200 bucks. Just depends on what the strike is, how far out it is, what the cost of it is, right? But you're paying. And the negative side of buying an option is you can only win one way, right? So if you buy a call, you need that price to go up, right? Because you buy it, and if it's worth 65 cents, you need that price to go up so that that 65 cents for that premium goes up to, say, $1, right? And then you can sell it, and then you get to keep the difference, right? That's your profit in a sense, because you have to buy it at 65, then you sell it for $1, so you just made 35 cents, right? But if it goes sideways, your amount that you paid, that 65 cents, is decreasing, right? It's worth less, even though it trades sideways. If it does not move up, or it does not move up quick enough, the amount of that premium that it is going up may not be enough to overtake theta, because theta is eating away at that premium. So you get in here and you pay 65 cents, well, by this time over here, that thing may only be worth 20 cents, right? But in this case, you would have bought the put, right? And if you bought the put up here, so after it's running down a lot, you're probably going to want to take profit once it starts moving back, right? So that's the thing about buying options. If you're going to do a day trade on a buy an option, then you're going to want to get in and get out quick, right? You do not want to get in, buy an option with a 0 DTE and get out toward the end. You don't want to do that. You're going to want to get in, get up in price, and get out. But I don't do a whole lot of buying options, right? Because I like to stack the cards in my favor, per se. I like to sell the options because I have a few more ways of winning. Like I said, I win if it goes up or if it goes sideways or even if it goes down a little bit. I can still win. Buying, I can only win if it goes in my favor, right? And it has to go that one way and that one way only. So I know that was a lot to take in, and it might have been a little bit much, but I just kind of wanted to show exactly what all's going on. What am I doing? And this SPY daily selling puts and calls is something that I really enjoy. And I've just started doing this, right? I've just started doing dailies on SPY. So I'm kind of excited about it, and we'll see how it all plays out. But like I said, even if I get assigned those shares, and if the market did fall, yeah, I could be holding on to those shares for a while. But you know what? It's the SPY. I ain't too worried about it. It's not going under. It's not going away. It's not going anywhere. It's the S&P 500, right? Come on. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button, smash the like button. It'd be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.